All right, so you're back here again with the Meager Millionaire. I'm gonna run my mouth some more. So yesterday we took a lit on the chin there in the gold and silver market. Today we're seeing both of these metals rally. They're up about 0.3% on gold so far on the day and 0.7 on silver. Platinum took it on the chin. It broke below the $1,000 level yesterday, but we're back up 0.8%. Today is no big deal. This stuff, in my opinion, is still free. Don't really worry about these things and use these pullbacks when the banks are trying to fire all these paper derivatives on the market to accumulate more, and let's use the leverage against them. So today we're going to go on to explore a little article out of Kitco. It states that China's influence in the gold market is only just beginning. This is from the LBMA, the London Bullion Market Association, all right? And this is from a panel from the LBMA, all right? Now, if you get anything into these videos, please like, share, subscribe, tell your mom, tell your grandma, send it to your brother, put on your tinfoil hats, and let's get into the article. So China has played an unprecedented role in gold's rally to record highs this year. And while the markets may have been cooled in the second half of the year, investors should not underestimate the Asian's giant impact on the precious metals market. All right, so they're in there and they're buying. All right, I have a chart pulled up here on Trading Economics. It goes back to the year 2000, at which point they had 395 tons. Officially, lots of people state that they had a lot more gold than what they're actually saying. So in the year 2000, like I said, they had 395 tons. And now in 2024, they have 2.26 thousand tons. All right. So let's get into this a little bit further. China's influence in the gold market will only continue to grow as the economy evolves, according to a panel discussion at the London Bullion Market Association 2024 Precious Metals Conference. From a consumption perspective, the continued growth in China's economy and its large growing consumer group will create a solid foundation for China's gold market, said Dr. Zheng Gui, Vice President of Shanghai Gold Exchange, during the discussion. All right, so, the BRICS are a thing, all right? Brazil, Russia, India, China, South Africa, all right? All these guys, I believe, are out front-running the precious metals markets. They're sick of the American hegemony that's been going on for years and years and years now. And so if I was them, if I was in charge of a nation state, like let's say up here in Canada, where our gold reserves are officially zero, look, I would be acting more like a BRICS nation and consolidating our own pile of pet rocks. So Zheng Wei also noted that gold demand is evolving from basic consumption into an important investment asset within the Chinese economy. Yeah, it's an important investment asset because in 2019, gold was declassified from Tier 3 asset, which means that the banks can only hold it on their balance sheet at 50% and they're discouraged to hold it on their balance sheet because nobody wants to write down their books, to a Tier 1 asset, which means they can hold it on their balance sheets at 100%. All right? That's why it's an important investment asset. It's reclassification as a Tier 1 asset. Tier 1 assets are the best assets you can possibly hold. He explained that the SGE is in the process of streamlining its membership procedures, making it easier for international companies to tap into China's gold market. I believe there will be more trading strategies and a larger trading market, Zheng Wei said. This is a very exciting opportunity, and I warmly welcome global institutions to join our market. All right. Zheng Wei Feng, general manager of China's platinum company, CPC, described China's precious metals market as being an important crossroads. All right. The global precious metals market is in an important crossroads. If you recall, back in 1971, whenever Richard Nixon took us off the gold standard, all right, he said temporarily. All right, it's temporary. This is temporary, and we're going back. It is my belief. I'm putting on my tinfoil, double-layered tinfoil hat this morning. Zhang Feng, general manager of China's Platinum CPC, described China's precious metals market as being an important crossroads. Chinese players are becoming traders rather than net buyers, he said. He noted that as gold prices have risen to record highs in the second half of the year, many initial buyers have started to sell into the market. Zhang added that while the evolution of China's gold market is positive, it is not without its challenges. He noted that consumer demand faces two major hurdles: weak economic growth and record high prices, cooling the market. All right, so a lot of people bought this stuff a while ago. They're probably taking profits. I was into a shop yesterday to pick up some pet rocks, and I was speaking to the nice lady working the counter, and she had told me that a lot of people are in like selling their silver and stuff. So my belief is that these people who are currently selling, let's say silver for instance, are people that bought it $40, $50, $60 Canadian here years ago, and are now trying to unwind their losses on their positions. And I think that this is a big mistake. And the same thing with these people here selling gold. I think that it's a horrible mistake. Central banks are the number one buyer of this stuff right now. So it's going from the weak hands to the strong hands, all right? Zhang added that while the evolution of China's gold market is positive, it is not without its challenges. He noted that consumer demand faces two major hurdles: weak economic growth and record high prices cooling the market. He added that he expected consumers to return to the market when gold becomes more affordable. Now, let me ask you a question. Do you guys think that gold's going to become more affordable or less affordable? All right, so you have to think. Do you think that inflation is going to go up, or do you think that inflation is going to go down? I think that inflation is going to rock people's worlds, and I do believe that these metals prices are going to go significantly higher. And of course, I have no idea what I'm talking about. Don't listen to me. I have no clue. Zhang said that CPC, while not massive, has exposure to every part of the precious metals market, from recycling and refining to jewelry and trading services. He added that one of the companies under CPC operates about 2,000 jewelry stores in China. John Levin, head of the metal sales and trading for Asia Pacific at TD Securities, joked that Zhang said his company is small. He is not exaggerating. He explains that it is difficult for Western investors to comprehend just how large the precious metal market in China is. Yeah, China actually encourages their population to buy gold and silver, all right? It's more recently been a silver thing, but historically it's been a buy gold thing, all right? Do you hear any elected officials here in the West or in Europe, anywhere, telling their citizens to buy gold and silver? The answer is no. They want you in the debt system. They want you to be SLAVESs, all right? Now comply. He emphasized that the size of the country's market is why it remains a major global influence. People need to understand the scale of how big it is. There are jewelry stores that would put some of the biggest U.S. chains to shame in terms of the number of stores and offerings, he said. Gold prices are where they are today, in part because the buying power we saw in Chinese consumers in the first half of the year. I don't think it has anything to do with that. I think that it has everything to do with central banks buying it. But what do I know? Levin said that one of the biggest reasons Chinese consumers will continue to invest in gold is that as an investment, it has done exactly what it is expected to do. It's not an investment, all right, people? Gold is not an investment. Gold is money. Silver is money. So you take your dog shit that you earn every day when you're busting your asses and you trade it in for real money. Dog shit for real things. Try it. It works really good. As to how the gold market will grow, Zhang Hui, I'm working on my Chinese here today. Zhang Hui said that the SGE, Shanghai Gold Exchange, I guess, is now looking to expand beyond China's borders. He explained that they have been working with institutions in Malaysia, Thailand, Singapore, and Hong Kong to make SGE an international exchange. By expanding international, Zheng Hui said that SGE can stabilize the nation's physical demand, leading to less volatility in premiums. Okay. We're ready to share our development experience and technology, he said. We want to work together to expand the vision of the gold market and create more collaboration opportunities. Our participation into international market is not to compete, but to cooperate with local players in an international counterparties. Levin said that SGE focuses on expanding internationally should ultimately be a positive step for the gold market, although it will increase competition among companies. He noted that the entire marketplace will grow. While the future looks bright for the Chinese gold market, the panelists also noted that it faces some near-term challenges. In recent months, the People's Bank of China has been launching new stimulus measures to support the nation's slowing economy. Yeah, no shit. What do they do every time? They get into trouble. Well, we need to stimulate. Oh, so much stimulus. What's gonna happen? The price of metals are gonna blow up. Duh. Same song and dance, different bunch of fools. And some panelists noted this could prompt Chinese investors to sell their gold and invest in equity markets again. Fat chance. However, any weakness in the domestic gold demand is expected not to be more than a short-term correction. All right, so people are going to unload this stuff to free up some capital, and then it's going to blow up, and they're going to have to buy it at higher prices again. So let's just have a look here at how much gold China has had. We've recently touched on this. They've gone from the year 2000, 395 tons to 2,262.45 tons as of 2024 here on Trading Economics. So let's kind of have a look at what that is in price. All right. So obviously the Chinese are running on the yuan. All right. Am I saying that right? Y-U-A-N. Yuan. All right. Tell me if I'm wrong. So in 2004, for instance, an ounce of gold was approximately in yuan, maybe 3,500 yuan, 4,000 yuan. All right. And during that time, they have been accumulating. Currently, an ounce of gold is over in China here, over 18,000 yuan. All right, so we've gone from about, let's say, 4,000 in the year 2004, and now we're currently 20 years down the road, and the price has gone up by a figure, like let's call it 5 to 6x. Okay, so 5 to 6x over 25 years is quite a return. And in fact, like I said previously, gold is not an investment. Gold is the backside of the money that we get paid, which is in fact not money at all. It's a weapon, it's a currency, it's a fiat currency. It's created by governments, by decree. They have these things called legal tender laws, and essentially they can make whatever they want into money, add some zeros onto a screen, and tell you and I to go about living our lives with this weapon. So I just merely offering some alternatives here for people to think about. And yeah, pet rocks. Let's go pet rocks.